This is the World Financial Report podcast. My name is Randy Marshall. Joining us is our financial and diamond expert, Harold Siegel. We're taping on December 20th, 2018. Our time is 8:14 a.m. Mountain. Connect with Harold at rarecoloreddiamonds.com, rarecoloreddiamonds.com. This is our last show of 2018. Back in 2019, we want to wish everyone a happy holiday, Merry Christmas, Happy New Year. Hope the holiday season is good to you and your family. Connect with Harold via the website rarecoloreddiamonds.com. Get the podcast and get our free weekly newsletter. It's the companion to the podcast with all the information that we talk about on today's show. We start today, US dollar, 96.47, Canadian dollar, 74.21, the euro at 1.14, the pound at 1.26, gold at 12.59, it's up 17.50, silver 14.77, it's up 21 cents, gold-silver ratio is 85, platinum 7.93, up $9, palladium 12.55, very close to gold, it's up $10, WTI 46.98, down $1.69, Brent is 55.50, down $1.66. Nat gas is $3.85. Bitcoin in US $4,013.91. Bitcoin in Canadian $5,410.55. The Dow sits at 23,232. S&P 2506. Nasdaq 6642. TSX 14,264. The big news of the week for the financial markets: the Fed, they did raise rates. People, including Donald Trump, were warning them. Trump was sending out tweets, don't do anything stupid. Well, they did raise rates. The Fed hikes rates, lowers projection to 2 increases. The Fed took the target rate for its benchmark funds to 2.25% to 2.5%, and they now say that there will be 2 hikes next year. The market is saying no hikes next year. Harold, the Fed, they believe there's a strong economy. I guess it's a balancing act between keeping inflation in check, also raising rates, getting back to normalization without killing the economy. It's a very difficult thing to do.
Oh, yeah, and unpopular for sure. But, I was saying to my son yesterday as the news came out, and the market was up. The Dow was up at that point about 150, 160 points, but it was up over 300 points during the course of the day, which is how much they believed in the market that the Fed was not going to raise rates. Once they raised the rates, I said to John, just watch this market. And we sat there and watched it tick lower and lower. And it's not like it just fell out of bed. What it did is it started ticking lower, and then it started getting into a little bit larger moves, and then by the time the market was getting ready to close is when it made its final push down and finished down about 320 points negative on the day. But if you take it from the high, the market was down almost 700 points on the day. And the day prior to that, the Dow was down 500. So at this particular point, realizing that they did raise rates, which takes a lot of steam out of the stock market, really is concerning for investors at this particular time. One of the reasons why is that raising interest rates when you're $20 trillion in the hole is a concerning situation, seeing that not enough money is coming in to lower the deficit anyway. So, there's certainly issues. The news that came out yesterday, and the market plummeted as a result, and it's down another couple hundred points today. There's no news that I see coming into the marketplace at this point that is going to raise the Dow. So the fact is there's a lot of negativism out there. A lot of the investors are getting nervous and realizing in 2019 that there's going to be at least 2 other interest rate hikes makes the market, basically sideways to lower. So we're now down to 23,000. We've seen the market pull back about 3,500 points. When you look at the market on a whole, realizing that, it bottomed out in 2008 and 9, when the market dropped to 6,500 and made a 20,000 point almost uninterrupted move, which was spectacular, the biggest bull market in history. Reason for that was, it's not that the U.S. economy was that amazing, it's that all this money was coming in from foreign countries as their markets were plummeting and their economies were plummeting. All that extra money came into the Dow because the U.S. righted their ship prior to Europe. So at that point, you saw so much money coming into the U.S. stock market, into the Dow, that the market made that 20,000 point move on the upside. But now things are starting to shake out. Now you're starting to see interest rate hikes. Now we've got problems with China, one of our biggest trading partners. Now you've got other issues, derivatives in the marketplace. You've got, again, higher interest rates with a debt that's insurmountable. And there's no news in the marketplace at this particular point that's going to save this market. So if more negative news comes out, if something, for example, happens with Trump and he gets impeached or he gets in trouble over this Russian situation or anything like that, look for the market to absolutely fall out of bed. Look for the market to drop, 10,000 points type of thing as a result of that, because the reason that the market was stronger at the beginning was because of the fact that Trump, helped with taxes, and it showed that he was a businessman and trying to really, right the ship and help the economy. But the market is lower for the year, and that hasn't happened too often. So we're looking at a situation right now where the Dow is in a bit of trouble, could get into an awful lot more trouble. And if you're heavy in the stock market, now is not a time to be speculating. Now is a time to be putting stops in the market or getting out of the market in total and sitting on the sidelines, unless that's going to cause a major tax situation for you. But at this particular point, I don't see any news coming into the marketplace that's going to help the Dow. In fact, I only see news regarding Trump specifically and China that could really hurt the market and see this market really start to tumble. So again, caution. If you're in the market right now, you may want to look at stop losses, or you may want to get some of your money out of the marketplace. And if you're thinking of coming into the market, now is not a good time to do that. This market could fall substantially further.
The move the Fed made, fourth increase this year and ninth since it began normalizing rates December 2015. To give you an idea of what's happened in the stock markets of the world, we have in our free weekly newsletter, and you can get it from Harold. Connect with him at rarecoloreddiamonds.com. Lots of stories. Almost $15 trillion has been wiped off the global equity market this year. 15 trillion. Alan Greenspan says investors should prepare for the worst. Greenspan says the party's over on Wall Street, and he was the one who famously came out and said 2 decades ago, irrational exuberance in the stock market doesn't see equity prices going any higher than they are now. He says it would be very surprising to see it sort of stabilize here and then take off. But what he does say, he really believes that investors should be warned. A correction would be painful. At the end of the run for cover. Ron Paul, former congressman out of Texas, ran for the nomination for the Republicans on the presidential side. He's saying a 50% correction will spark depression-like conditions and be worse than 1929. He's warning that the stock market may collapse. As well, to give you an idea of where we are here in Canada, stocks are down on the TSX at around September 2016 levels. So we have pulled back greatly. The stock market is on pace for its worst December since the Great Depression. We have a story on that and 2 charts in our free weekly newsletter. Check that out. Jim Cramer of CNBC saying it's not a safe market. In fact, it's the most treacherous stock market I've seen in many years. And he is very concerned about what's happening. Jeff Gundlach coming out and saying that the S&P 500 is headed to new lows, and he's believing that this is a bear market. Jeff Gundlach also says passive investing, which is in a mania according to him, should be avoided by all investors. Passive investing is investing in index funds. He says, my strongest advice is to not invest in passive U.S. index funds. He really believes that investing that way and by index and robo-advisors are going to exacerbate problems in the market because it's a herd behavior, a herd mentality. Jim Chanos says there's something wrong with the stock market when rates are this low and yet they're raising them and it's causing a panic. Billionaire Stan Druckenmiller coming out and saying he's thankful he's no longer in the hedge fund business because algorithmic and quantitative trading have taken over the markets. He said, I made 30% a year for 30 years. years. Now we aren't even in the same zip code, much less the same state. And he's talking about the returns that his company has been generating. And he is very strongly against quantitative trading, quant trading, and algorithmic trading, which is done via computer. Ken Langone, he says the stock market is a casino. So Harold, all those stories in our free weekly newsletter, but here you have some very smart, very wealthy individuals coming out, and even Alan Greenspan, the former Fed chair, saying that investors should prepare for the worst. 15 trillion wiped off the global equity markets this year. The Fed raising rates. Will they do more in 2019? Time will tell, but it is getting to be very chaotic.
You bet it is. Just to clarify, where 15 trillion may have been wiped off the upside of the marketplace, somebody made that money, because that just doesn't disappear. When real estate prices fall, that's one thing. Nobody's shorting the real estate market, or nobody's shorting a home type of thing. You can't do that. However, in the stock market, somebody was short that market. So as the market plummeted these last few months, there was either hedge funds or traders or organizations or whatever that took the opposite side of the trade and made that money. So whereas we may see all the major stocks getting a haircut and seeing their stocks dropping, which drops the value of the Dow, somebody that was sharp and knew what they were doing was short that market and picked up all the money that was lost on the downside. So that's one thing about the commodity and the stock markets, is that money isn't lost like it is in other markets, because there's a buyer and seller for every stock or commodity. Otherwise, the transaction doesn't work. So I do believe that what they're saying is true. The fact is that Donald Trump is not a politician. He's a businessman. He's a bully. He has made some mistakes. He's done a couple good things. He's got a lot of followers, but he's got a lot of people against him also. Does he actually know what he's doing? I mean, the fact is that the Dow is plummeting. We've had the worst December since the Great Depression in the 30s. The fact is you've got some of the top analysts in the world right now coming out and saying, get out of this market or be very, very careful. The fact is that if this market was to do what it did in 2008, where it dropped from 14,000 to 6,500, basically dropped the 50% that some of the analysts are predicting at this point, this time, that would wipe the market out. You would not see people recovering at this particular point. All of the baby boomers that are back into the marketplace with all of their money and everything because they need that retirement income would be lost. The economy in the United States would plummet, as would the dollar, which would put gold prices in the thousands of dollars. So, we always talked about a scenario because there was always the opportunity for gold, to make that one big run. And we were in that run from 2000 to 2011. Gold went from 250 to 1900. It was on its way to 2000 to 2500 until the exchanges did what they did and raised the margin requirements and ruined the gold and silver market, just so the stock market could run. Now, if that was to happen again, I don't think there could be any interruption. I think that the amount of money and confidence that would be lost in the market if it did drop 50% or 30% or whatever it's going to drop would devastate investors. The middle class would be gone. The wealthy would be in big, big trouble. And it is very possible that this is going to happen. So if you are one, of the people that have all of your money or most of it in the stock market, you better give consideration, because this year, if you invested $1 in the stock market, you're losing. For the first time in a long time, you're losing money. And as things start to get worse and worse, you've got China, in a trade war with the United States. Well, you got to understand that Amazon and all these major corporations deal with China. They deal with China in a huge way, and they're massive clients. And because of Trump, these businesses are getting interrupted and they're getting hurt. So is it possible that the Dow could drop 50%? Yes, it is. We've seen it happen before, and it wasn't that long ago. If it did do that, what would be the ramifications? If the Dow started to fall that much, we would immediately be running into gold, because there would be such a lack of confidence in the U.S. markets and all that not only would the Dow fall, but so would the U.S. dollar. And we all know the tie-in between the U.S. dollar and gold. When the U.S. dollar is strong, gold is weak, and vice versa. So if the dollar weakens, just look at today. The U.S. dollar dropped today for whatever reason. It shouldn't have, because they raised rates yesterday. When the Fed raises rates, the dollar should go up, and it will. It'll probably go up Friday, and it'll probably go up next week, and gold will back off. But gold's up $17 today because the dollar is down, and it's not down that heavily, which again really doesn't make sense, because when you raise interest rates, what should be happening is the dollar is strengthening, and that's how you fight inflation. So I don't think that today, I think today is more of an aberration for gold. I don't see why gold would stay above 1250, 1260, when at this particular point, the dollar should gain strength because they did raise interest rates. So again, these are very, very dangerous times that you've got to be very concerned about. One thing is that you've heard me mention stop losses in the market before. Don't get lulled into a false sense of security that when you think that, let's say, for example, you've got a stock that's trading at $100 and you're comfortable with going to 90, but if it falls below 90, you want to be out. So you put a stop loss in the market at 90 that says, if the market hits $90 on that stock, I want to get out. But what most people don't understand is that once it hits your price of $90, it becomes what is called a market order. And then the next trade is yours. Now, in a fast-moving market where the markets are plummeting, that next trade may be at $60 or $70. So where you say, well, gee, I was supposed to get out at 90, why am I getting out at 60? It's because the market moved so fast that it gapped, and that's where you got filled at. So don't just go into a marketplace blindly and say, okay, I'm still in profits in my positions, but I don't want to lose that, so I'm going to make sure you know how stops work and how they can work for you and against you, because most people don't understand that, and they get a real awakening when they find out that they didn't get stopped out at the price that they thought that they were, and all of a sudden they lost a lot more money than they thought they were going to do. So in these type of fast-moving markets, like yesterday, where the market was up 300 and change and finished down 300 and change, that was a 700-point move. That was a substantial one-day move in the marketplace, and we've had several. The day before that, the market was down 600 points. You've seen a 1,300-point drop in the marketplace in reality in 2 days of trading. So be very, very careful. If you need information on how to utilize stops in the market or whatever, you could always email me, and I will answer any of your questions and help you as much as I can. All I'm saying right now is, even though gold is up $17 today, it doesn't warrant it by what's happening in the market. The market should be that the dollar is actually stronger today, and gold should be down $15 or $16, not vice versa.
Connect with Harold at rarecoloreddiamonds.com, rarecoloreddiamonds.com. As we said on a past podcast, toughest market since 1972 to make any money. Also, we had mentioned 89% of U.S. denominated investments have not made any money. To give you an idea of how tough this year is, the big stars of the hedge fund world, they are losing their shirts, and some fear a major financial wipeout is imminent. There are approximately 11,000 hedge funds that manage in excess of $3 trillion in assets, and hundreds of funds could be gone by next year, according to insiders. Some sectors of the fund industry are crowded and competing with other investment vehicles, and what we're seeing here is the hedge funds not make any money, and they are in a position where they're laying off, firing, shutting down. We're seeing a very difficult market. Here in Canada, a warning from David Rosenberg. He is warning that there could be a debt bomb in Canada that threatens to plunge this country's economy into a recession next year. He says nothing is inevitable, but the risks of recession for Canada for next year are higher than a lot of people think. And he's the chief economist at Gluskin Sheff and Associates. He really believes that the debt that we have in Canada is a major concern. You start adding in the impact of higher rates, and we could have a cascade effect in the next 12 months. Canada's debt to income ratio rose in the third quarter after revision showed households owed more relative to their incomes than previously believed. The ratio climbed to 73.8%. Now, the Bank of Canada, the governor, Stephen Poloz, he isn't buying into a recession. In fact, he told CTV News chief anchor Lisa Laflamme doesn't expect an economic contraction in Canada next year, while warning the country faces risks that he likens to fender benders rather than big events. We're at a little bit of a tipping point, and I don't see how the Bank of Canada can raise rates going forward because we're at a very dangerous point.
And the fact is that would be a very foolish move to raise them at this particular point in Canada because things are very sensitive there in the marketplace, but they will probably follow the United States, and they're going to probably do it anyways. So, it's a very concerning thing that when the markets get like this and there's the potential for massive sell-offs, and, most people sit there like, and don't take this the wrong way, like a deer in the headlights type of scenario because they don't know what to do. Is it a short-term thing? If I sell out now, does it affect my tax situation, my retirement funds? There's so much to think about before you make a bold move like selling out of your stocks, because in a lot of cases, most people have their retirement funds in the stock market. So it's a very, very difficult thing. I would think that if the market did fall as substantially as some of these prognosticators are predicting, and it's very, very possible, I would think that we could go into a depression. I would think that people would be just at this particular point fed up, that it's so difficult to make money in that market that they wouldn't know what to do. The fact is that it's a depressing time when you lose, that kind of money in a marketplace and there's no chance of getting it back. So I really hope this doesn't happen, but the signs are pointing towards, a heavy sell-off in the market, and it could happen a lot sooner than most people think.
The market really started in March of 2009 to take off. And it was sort of funny. The president of the United States, Obama, said, now might be a good time to invest in the market. And strangely enough, he was right. But here we are 10 years on, and things are very difficult. The global debt hit a record $184 trillion last year. And that is one of the reasons why we're seeing asset prices go up, because of all the money that's floating around. It's equivalent to $86,000 per person, more than double the average per capita income. The U.S. federal budget deficit surged for a record month of November. It was up to $204.9 billion. That's how much of a deficit that they had. You can see the loan market for students. U.S. student loan debt outstanding reached a record $1.465 trillion last month. There is so much debt out there. A story in our free weekly newsletter, and get it from Harold, the companion to the podcast, via rarecolorediamonds.com. Half of Americans haven't recovered from the recession, a story from CBS News. So we're in a time right now where you really need to be conservative in how you invest your money. We do have some quotes on the precious metals side of things in our free weekly newsletter. This is from Peter Schiff. He says, I think gold and silver are incredibly mispriced because it really reflects the excess confidence that people have in central banks and fiat currencies. They should have no confidence, but they do. Don't tell people to put their entire net worth in gold. I tell them 5 to 10%. Most people have no money in gold. Those people are going to be very unfortunate. Harold, it is a time, I think, where as we head into 2019, hard assets, precious metals have a very good chance going forward of doing very, very well.
I agree with you. I do. I think that, as these markets get more and more volatile and people see what's really going on, the markets shift, and you don't only make one investment in your life and that's it. You've got to change with the times. If the dollar is going to weaken and the markets are going to weaken, there are markets like gold and silver that will respond to that. And that's, what we do want to see. Now, again, we've talked about this before. The market went up $17. It's at $12.60. So it broke above the $12.50 level, which is a significant move for the market. However, it's still $130 lower than the price that we really need to see it at, which is for this market to close twice above 1380. So if we get to that point, it's not that we're missing out that much. We now have a confirmation that we're in the right market at the right time. And then we can sit back and watch that market go. There's a chance that gold could really take off, break 2,000, and go to the numbers that we talked about many, many years ago, because the situation is that dire. And it's not only Canada and the United States that's in trouble. China's in trouble too. Don't think that these tariffs have not crippled the Chinese marketplace. It's hurt them so badly. And we brought up a few years ago the fact that China had a real estate problem, and they had these ghost cities, these cities that they built that were magnificent that nobody ever moved into. And what is the number now, Randy? 50 million condos? Was that the number that are vacant?
So they're saying a fifth of China's homes are empty. That's 50 million apartments. Also interesting to note, and this is in the newsletter, over 8 million abandoned homes in Japanese suburbs. So yes, it's very bizarre. All these ghost cities are still out there, and they have 50 million empty apartments.
Unbelievable. Again, at a time when their economy is changing. So they totally missed the marketplace when they built these cities and all these additional condos and everything like that nobody ever moved into. And, it seems like it was only a couple years ago, but it was longer than that. It was probably 5 years ago that this has happened. And now these homes are deteriorating. So all this money, all this building, everything that was heading in the right direction for China has made a total U-turn. So again, how quickly, when you're leveraged, how things can turn against you. It's great when the market's going your way and you're making money hand over fist. But when all of a sudden that ends and the markets start to change and you don't adapt to that change, all of a sudden you start to see, the stress and the risks of trading in those type of marketplaces. And China is really starting to realize it. 50 million vacant homes that have never been moved into, that all that money was spent and nothing was ever done with it. And now these homes are not being kept up, so it's a total disaster. I don't know how China could ever get over that type of loss. Then added to the fact that Trump has added those tariffs, which is hurting their business tremendously. We'll have to see what happens, but China's not in good shape right now, and I would not be investing in their markets.
In our free weekly newsletter, take a look at some of the articles. Silver to climb to $20, outperformed gold in 2019. Bulls lining up for gold means it's going to be a good time for silver. Clive Mond has two charts, one for gold and one for silver. Get those from Harold at rarecoloreddiamonds.com. Rarecoloreddiamonds.com is the website, and good news coming out of Canada this week. It's a rarity, a huge find, a 552-carat yellow diamond discovered in Canada, largest in North America. And it comes out of the Divik Diamond Mine, approximately 135 miles south of the Arctic Circle in Canada's Northwest Territories. It's the largest diamond discovery in North America, far surpassing the previous record of 187.7 carats, the Divik Firefox. And what they plan on doing is finding a partner to cut and polish the stone. And I wouldn't be surprised, Harold, to see this stone broken up and they make it into many different diamonds, because the size of this thing is absolutely massive at 552 carats.
You better believe it. I hope that they can cut it into, and make other diamonds from it. If not, it's just going to be an unbelievable diamond. It's the size of an egg. It's absolutely magnificent. Just very, very happy to see a diamond like that coming out of Canada. And it's exciting. It's exciting for the diamond market. There's been so much news in the diamond market recently, from the auctions and everything, and certain pieces that have sold that had famous owners type of thing. 2018 was one of the best years for diamonds that we have ever seen. At a time when all the other markets are suspect, the market that really did probably the best and the highest returns were in the rare color diamond market. So, for that, we're very, very excited. We believe that will continue. And again, it's going to be interesting to see, if they're able to right the ship and correct these markets in the U.S., I personally don't believe that they're going to. I believe that there's so much trouble that was not addressed, that was swept under the rug back in 2008 and 9 when quantitative easing was happening, when they were printing all this money, when they were bailing out all these companies, when they were becoming partners with General Motors and Chrysler and all these companies that they became partners. So those problems have not corrected themselves in a lot of cases. Look at the price of bank stocks and realize that the U.S. bank bailed out all the banks, and none of the banks have really recovered. So I would say at this point here that we have issues in the marketplace, and some of them still exist from 2008 and 9, and that's really put the U.S. stock market, in my opinion, into a very dire situation that could really hurt all investors worldwide. Because, again, the reason that the Dow took off in the beginning is because European and Asian investors from all over the world were not getting returns and came to the U.S. for their investments. And again, now it's not turning out so good. We could see a mass exodus that could really hurt the marketplace.
I think the big thing that's hanging over the market right now, the tariffs and the fight with China. Markets like certainty, and that uncertainty is still out there. At one point early in the year, stock markets booming, GDP was strong, employment was strong, everything was going the United States way. President was bragging about how things were so great, and he wanted to take on China and to have a proper package in place to do trade with them. Well, these tariffs, due to the timing and his hubris, have turned into what is now a nightmare. And we are seeing a major pullback due to increase in rates, the lack of a deal between China and the United States. Every time you get a little bit of a word of maybe something could be decided, the markets rally a bit, and then that's not true, so then they pull back. If they could get the situation figured out between China and the United States, I think that would help the market a lot. If the Fed stops raising rates, that would help. But at this point, Trump is such a wild card, you just never know which way this thing is going to go. Harold, in closing, as we get to the end of the podcast, one person is doing very well, your buddy Tiger Woods. He has a net worth of $800 million in 2018. He came back, won a golf tournament when no one ever thought he would win again or maybe even play again. It was good to be Tiger Woods in 2018.
You better believe it. Great to see. Love to see him win. At least sports gives us some type of solace. They give us something to fall back into when the stresses of life are high as they are at this particular point. 2018 was not a spectacular year. The markets did not respond in a way that people made a lot of money. It just seemed like a stressful year. And going into the holiday season, for whatever reason, it just doesn't feel festive at this particular point. And I think a lot of that has to do with the marketplace, and people are concerned about, their investments and things like that. And it's warranted. These are very, very difficult times. But 2019 could be a much better year, and that's what we are hoping for. We want to wish all of our listeners and our friends and everybody a very, very happy holiday season and a very happy and prosperous new year. I wish that to you, Randy. We've worked together for since 2000, and it's been a pleasure, and it's been a great year again this year. The one thing that we haven't been able to do is pick a trend in a marketplace, because there is none at this particular point. And one thing that we will never do is make a recommendation to our listeners just for the sake of making a commission or whatever. We never would do that. So again, there will be opportunity moving into the new year. And from my family to yours, I wish everybody a very, very happy holiday season and a very prosperous new year.
Thank you very much, Harold. Great working with you on the podcast. Merry Christmas, Happy New Year, Happy Holidays to everyone listening to our podcast next week. We will be off. Most people are taking about 2 weeks off here. We will be off and be back at the beginning of 2019. Connect with Harold at rarecoloreddiamonds.com. Learn about blockchain. Learn about investing in rare diamonds like the Argyle Pink Diamonds that Harold has. There's an opportunity there in Argyle Pink Diamonds. Connect with him. Get the free weekly newsletter, the companion to the podcast, rarecoloreddiamonds.com. That's it. Another edition of the World Financial Report podcast. My name is Randy Marshall for Harold Siegel. We will talk to you in 2019.